How landlords pull out 100k tax-free and the one mistake that gets you rinsed. Let me tell you something wealthy landlords do that nobody talks about. They're extracting six-figure tax-free cash from their portfolios without selling a single property and without paying HMRC a penny. And if you stay until the end, I'll reveal the one part of the strategy you absolutely must get right, because if you get it wrong, you'll be the one HMRC makes an example of. So I was on the phone today with our new mortgage partner, Jason. And when I say this man understands how wealthy people move money, I mean it. Not your average broker. He actually gets the game. We're talking about one of my clients with 1.6 million portfolio, all held in personal names. Amazing assets, solid rents, but from a tax perspective, clunky, inefficient, and costing them more than it should. So I say to him, they want an extraction strategy. They want money out of the portfolio without selling anything. What are we looking at? Jason didn't pause. No waffle, no fluff, no it depends. He goes, refinance 75% loan to value and release the capital tax-free. And most people have no idea that's even possible. But this is exactly how wealthy landlords quietly pull six-figure sums out of their portfolios legally without triggering a tax bill and without selling a single property. And before the crybabies start in the comments, this isn't a loophole, it's not a scam, it's not tax avoidance, tax evasion, it's not a trick. This is one of the most powerful wealth strategies available in the UK, and barely anyone outside the seven-figure property world knows it even exists. If you've never heard this before, stay with me. Because once you understand how this works, you'll understand how the wealthy scale while everyone else grinds. Now, before you run off and try to refinance everything you own, let me say the one thing nobody in the property world seems to talk about. Well, actually, that's a lie, because I bet Samuel Leeds does. But just because the money is tax-free doesn't mean the strategy is risk-free. This is where people get themselves into trouble. Yes, refinancing gives you tax-free capital, but you're also taking on new debt. Your interest payments change, your cash flow shifts, your entire risk profile moves. If you do this without a plan, without understanding the tax implications, and without knowing how the borrowing interacts with your personal versus your company structure, you can undo years of progress in one decision. Most landlords only look at the cash hitting their account. Wealthy landlords look at the tax treatment of the interest, the long-term gearing strategy, the future exit plan, the inheritance implications, and whether new borrowing actually aligns with their business model. And that's the difference between someone who owns property and someone who builds wealth with it. Let me be blunt. If you're going to use refinancing as a wealth strategy, you need the tax plan, the structure, the numbers to back it up. Otherwise, you're guessing, and guessing is how HMRC ends up owning half your portfolio. If you want this done properly with a strategy that makes sense for your portfolio, your income level, your tax bracket, and your long-term goals, book a call with my team at Tax for Pros. We'll walk the numbers, work with our broker, and build a blueprint that lets you extract cash tax-free without blowing up your future, because this strategy is powerful, but only when you do it like the wealthy do it. Now let's get into the part almost nobody understands, and this is where landlords accidentally walk themselves straight into HMRC's arms. Yes, refinancing is tax-free, but what you do with the borrowed money determines whether the interest is tax deductible. And this is where people mess up quietly, slowly, and expensively. So let's break it down cleanly. HMRC only allows interest deductions if the borrowed money is used for the property business. If you borrow 300k and you use it to buy another rental, great, interest is deductible. If you use it to upgrade the portfolio, still fine, but if you borrow that same 300k and use part of it for a new car, a holiday, a wedding, private school fees, a personal loan, a kitchen, a horse, or any other personal spending, HMRC doesn't allow the interest on that portion as an expense. That means your tax bill goes up quietly but consistently every single year, and most landlords don't even realise it's happening until years later, when one day their accountant finally asks, what did you actually use that refinance money for? By then the damage is done And if the portfolio is held personally, like the client I mentioned, you're already capped at the 20% interest credit. You're not getting full deduction anyway. So stack restricted relief on top of non-deductible interest on top of higher rate tax, and you've just turned a tax-free strategy into a tax disaster. This is why structure matters. This is why planning matters. This is why wealthy landlords never do this alone. Here's the part people never see, because this is where refinancing stops being a quick cash grab and becomes a wealth strategy. The wealthy don't refinance randomly. They refinance intentionally. They know exactly how much they're borrowing and why. They know how it impacts their interest deductions, how it fits into their long-term tax position, and how it sets up their next move. This is the difference between a landlord and a portfolio architect. So let me show you how the wealthy actually use refinancing. They recycle equity into more assets, not more lifestyle. They turn one property into two, two into four, four into a whole portfolio. That's how they scale without earning more. Their equity does the lifting, not their income. They don't borrow blindly. They borrow with a tax plan. They know exactly how much of the interest will be deductible and how much won't. Nothing shocks them later. They think about gearing, not emotional borrowing. Mathematical borrowing. Gearing determines risk, cash flow, tax position, refinancing windows, and long-term wealth. Most landlords never think about gearing until something breaks. The wealthy manage it deliberately. They match borrowing to purpose. Personal spending is personal cash. Business borrowing is business use. They don't mix the two because HMRC doesn't like blurred lines, and HMRC always wins blurred line arguments. They use refinancing to create liquidity without selling. Selling triggers capital gains tax. Refinancing doesn't. Wealthy people aren't selling their assets to access money. They're leveraging their assets to keep growing. That's how you build wealth without shrinking your portfolio. They run everything through a structure. This is the part no one understands. A refinance inside the right structure is 10 times more powerful than the exact same refinance inside the wrong structure. If your portfolio is in personal names, your interest relief is restricted and your tax exposure is higher. But with the right structure, you can maximize interest deductions, smooth cash flow, build long-term tax efficiency, reduce future inheritance tax, and borrow in a way that supports, not suffocates the portfolio. This is why the wealthy don't just get advice, they build systems. And that's the truth most people miss. Refinancing isn't about quick money, it's about understanding the architecture of wealth and using debt as a tool, not a temptation. If you get this right, it transforms your portfolio. If you get it wrong, it quietly drains you for years. So let's finish with this, the truth that most accountants and most brokers never say out loud. Refinancing is not the strategy. Refinancing is the tool. The strategy is what you build around it. Anyone can borrow money. Anyone can pull equity out. Anyone can take tax-free cash and feel clever for 5 minutes. But if you don't understand how the interest is treated, how the debt affects your risk, how the structure impacts deductions, how the borrowing links to your business purpose, how this fits into your long-term tax plan, or how this shapes your exit strategy, then you're not building wealth, you're winging it. And winging it is how people end up with higher tax bills, restricted relief, cash flow stress, HMRC questions, and portfolios that look brilliant on paper but bleed money in real life. Wealth isn't built through shortcuts, it's built through structure. So if you want to use this strategy the way the wealthy actually do, with precision, with clarity, and with a plan that supports you for the next 10, 20, 30 years, book a call with my team. We'll work with your broker, review your entire portfolio, run the numbers, build the tax plan, and create an extraction strategy that actually makes sense for your life and your goals. Stop guessing, stop hoping, stop building like the people who already made it. I'm Sarah from Tax for Pros, building wealth, not just businesses. All the links are in the description. See you next time.